opening bell. Yep, no premium on the 650 call on Google I have over here versus that 650 put. Notice how they're bringing them right down here to my range, everyone. That's that 850, 860 area I talked about earlier. That's the first pass, and that's a weekly 650 put right here in action with the $2.42 move. That's where you want to be buying. So get down. You have limit orders here, Mr. Plain. Get them in there right now and go 880 on one. Why this thing is doing its little hokey pokey on 43,000 shares. That's a discounted premium to that. No, on the 650 put on Google here live now. We have only 7 highs, so to get the low end of the 650 put live in the first 2-minute opening bell, they were 1130 on the close. And what is he looking for? That markdown wholesale bid. Now, Google only has 7 highs. This was where we were looking at price levels on a markdown was about 820 to 860, I think it was. We have lower level market tiers that we're looking at based on the highs. If we break highs, then guess what? These go lower. But right now, we're not breaking highs and we're reversing on a 3-minute opening bell tape. And we're finding out that the bid is 9 by 970 on a weekly. So what we're going to do is find out where we get support level and how each one of these gaps. Apple's doing the same thing. There's a 610 put. Here is the 595 call. But I love to steal this. $1.35 range on the open, $1.10 range on the put on the open. And you got support over here at 598. You're printing 86 lows on the open and 2 highs. And once again, it was based on that sell gap. So you can see where your call and put structures are moving right now. I'm also going to be watching this 725 put on Priceline. Priceline made the highs, just so people know. I was looking at 722, and I was looking at this 725, 330 weekly put. Brian Plain, it's marked down here. It is at 1160. We covered it in pre-market. It only has a 79 penny range, but it closed at $17, and the equity has reversed on 39,000 shares. And once again, as King Wholesaler, 1170, 1250, the markdown from $17, I'm going to get to buy it. So put a limit order out here at 9.8 right now, and we'll take a look at how the price line sets up. We'll see if we can break a series of highs. You only have 1 high and 7 lows now on that opening 4-minute opening bell print. 326, 2012. The thing that we like doing is getting wholesale over here. They created a 940 print on that Google trade. So we have these price line here. And Kareen, these are nice markdowns in the ranges. Okay. So you have a $3.54 range in the equity. And it's all on the opening bell. One thing we talked about was stealing bids here. That's a 421, 27, 25 put, and now they could mark these things down to 28.50. We were talking about that last week. They closed at 41.20. That's a big markdown, and that's going to be based on this right here. That NASDAQ 100 is at 27.48, and that's at 27.25. I recommend that, yes, markets can be made, but I would recommend that we get more closer to the strike price on a weekly level on the NDX 100. 27.50 put would be appropriate. Here we are live on that opening bell. I got a NASDAQ 100, 330, 27.50 put, and I got that NASDAQ. I've got all indexes on that 6-minute opening bell, just going to the limit right here, right now. And look at what they did. They were closed at $30.30. All right, MMT, in case, I'm going to tell you what, it's always wholesale in here, and that's the bid and ask spread, and you got to create a low. And you know what you have to do. Maybe you watch that top end pattern exhaust itself and see if you can't steal the bid and create a markdown $30.30. That's how big of a markdown. You would have to do it based on that 27.50 handle. Remember, on the opening bell is going to be the best entry to create a market. Yes, it costs you to do it, but you can just create the print with one contract entry. And what a gift and a markdown. But once again, you're buying wholesale to the markdown to that. So why don't you put them out there somewhere around 1360? It's going to take a little while, but just remember the markdown to 1640 to the bid is in play. Here's that low entry, 1160, $17 closing bell. What was it? A weekly, how they wrote the premium down, and then how they gapped the price line stock to 722.40, and that was a $17 hook close right here. And Karine, I told you you had to get in there and make that print, obviously. Now they're going to end up walking it higher, back above the 20s, if this NASDAQ 100 keeps reversing in the first 15-minute opening bell. 15-minute opening bell, 2 minutes away. Here's that markdown bid. There's that close at 30.30, 17.50 print. One contract traded, 9.42. Not only that, we're looking at how that print will affect everyone in the option pits. And they're going to say, wow, 17.50, that was 30.30. Well, we were getting it below there, and we still are going to see what happens if that's a pretty good resistance area in the 15-minute opening bell. Now, what we're going to do, though, is we're still going to try to steal this contract. In order to steal the lower price, though, you're going to have to break up above the morning high here in the 15-minute. So in the full 30-minute, you're going to have to break the highs on the NASDAQ 100 to bring your entry down to $13.80. Yes, you will have to break those highs. If you don't, there's been a print created with the 1280 markdown from the people that owned them on Friday. The close was 30.30. Okay? And you can see that $17.50 print, by creating that one print, that makes you a market maker, 1710 by 1810. And at any time, based on that 15-minute opening bell, someone had to create that print. And we're masters at creating prints. Why? Because we know that the rest of the world is going to look at that $17.50 print and that $30.30 close, and they're going to say, my goodness. But look at here. It's 1730 by 1820. Now, it's a psychological print that people will have a psychological impact that trade these indexes. 27 put, they're weekly. 2750 put, and you're right there. So, once again, good job, MMT. I'm going to conclude that contract. I'm going to conclude the price line deal. I'm going to conclude 1160 low. The last print was 1291. We're going to be watching below the market here. We'll be watching price line. It's up $5.30. We're just looking for that intraday morning wholesale bid, selling back retail to the public here. 1370s. That's a $2. That's, do the math. That's a $2 move in these contracts right here. So you bought 5 of them right there at that low from that markdown. You make your $2. That's a $1,000 ka-ching, ka-ching. Buying wholesale bids down there, $2.10 range between that high and this low. But it doesn't matter. What also matters is that closing range, $17. That's wholesale. That's what we do here. Well, that's why we talked about that 725. And that we also talked about in the morning that price line would have to run up to 722.50. It got to 722.40 and it established that high, printing $2 below it right now. So this is what it looks like right here, 119,000 shares traded. Okay, we got an MMT long apple. This is going to conclude the 15-minute opening bell. I got that big reversal. And Karine, there's a reversal to that support level. You better be watching the 595 call on that Apple made a bottom. We have an MMT that's entries 597.07 on that low to a 597.90 print. So that print is going to try to consolidate it. We're going to be watching. I told everyone I'd love to steal that 595 call. Look at the high was 10.95. I'm wholesale here at $8.99. Now, how do we do that, MMD? Let's put these bids down here, Mr. Plain, just in case they do break those lows. Put those bids out there, what I gave you in pre-market, and confirm those bids. So we have a good call by MMT. MMT has called that bottom here. Good job. Good job.